What is up, guys? Taiki here, and today I want to discuss, what are the next narratives that we have in crypto and DeFi? Because in the past couple of weeks, the markets have been kind of choppy, just kind of, like not much is going on. And I think in this type of environment, people are going to be looking forward to, I guess, things that are coming up that can potentially move price. Because in this type of market, if there's like no news, no catalyst, it's probably not going to move price that much. So I think it's good to be aware of future things that could happen in the market, or is about to happen in the market, and then thinking about your positioning, your farming strategies, your entire portfolio strategy moving forward. So if you like the content, please like and subscribe, and leave a comment in the comment section below. Check out the premium Discord, link is in the description below as well. So none is financial advice, of course, but let's talk first about my birthday curse. So May 15th is my birthday. I turned 27. I'm not a huge birthday person. Whenever I turn older, I'm just like, I'm approaching 30. That's kind of scary. But I guess, enough about like me aging. But if you think about like my birthday and how it kind of coincides with past market events, it hasn't been like that great, right? Like I've never had a moment in crypto where it's like my birthday and I've felt good about I guess like my net worth. And maybe like right now, May 15th, we're in the verge of correcting, right? That's totally possible. But if you go back to 2022, right, May 15th, it was like the top of like, I guess the dead cat bounce after Luna collapsed. It was like a week after Luna collapsed, and then a couple weeks later 3AC collapsed. And also if you go to 2021, it was, I guess, on the verge of just like this entire collapse from like 60K to 30K. And I don't even know what happened in 2020. It was, I guess it was like the top of like this entire COVID rally, post-COVID rally, before, the market kind of, just withering away sideways for, a couple of months. And then guys, zooming out in the weekly, people are calling for, this like the top, like the yearly top, right? As in, these are the yearly highs. We're gonna go sideways to down for the rest of the year, which I think is fully possible. I guess there's like the whole selling may go away analog that always happens. And I think, if you look at past 2 months for like May/June, it hasn't been that great. And I think people generally fear these types of events, and especially on social media. I guess it gets engagement, but I think what likely happens is something like this, where we had a pretty good 4 or 5 months to start out the year. I don't necessarily think that we're gonna just like nuke to like 20K again. Like why can't we just like go sideways from here? And I think if we are in like the sideways environment, it just makes sense to like look for future narratives, because if Bitcoin Ether, right, is generally going sideways, I do think that individual projects that have catalysts that are improving in fundamentals can perform, right, can outperform Ether and also Bitcoin. So that's something I want to talk about. Because like I mentioned, this is the Bitcoin volatility index. It's kind of going down, and even the stock market, maybe people are just going away for like the summer, right? And it generally coincides with like less volatility. This stats kind of crazy, right? But I want to talk about a few narratives that could happen, or I guess that's going to happen, that could move the markets, that I think is something that you should be aware of. So the first is going to be an ETH network upgrades, and generally whenever ETH has some sort of a network upgrade, it moves price, and there are a few protocols that do benefit. We have with the merge, right, we had Ether like rally, and then like most other altcoins rallied. With Trapella, with the Shanghai upgrade, we had the liquid staking derivatives. That entire sector rally also led to other sectors rallying, and then I guess like the next big Ethereum upgrade is going to be in probably in November or October, or sometime in Q4, most likely. Of course, there could be delays, but it's going to be the Cancun upgrade, because with the Cancun upgrade, there's going to be EIP 4844, which is going to significantly improve the fundamentals of these layer 2 tokens, the roll-up tokens like Arbitrum and Optimism. And even in a bear market, these are the 2 ecosystems that's actually been growing. And how do you value these tokens? It's really difficult to grasp. But I think, over time, if these roll-ups in this type of market is growing in the user base, if there's a bunch of economic activity happening in these L2s and the sequencer is making a bunch of money, I do think that, it should command a premium over other alt layer 1s, which, has to pay a lot more in security, right, in terms of like inflation, like the token inflation. And also like in terms of profitability, these L2s are just much more profitable. And I'll talk more about that later. So EIP 4844, it's going to introduce proto-day trading, and I'm not going to talk about the technical aspects of it. I'll just like do like a TLDR. It's going to increase or it's going to decrease the cost associated with rollups by reducing the amount of data that needs to be submitted to the Ethereum blockchain with this thing called like blobs. That kind of sounds dumb, but the more important thing is it's gonna lower Ethereum layer 2 transaction fees by order of magnitude 10 to 30x, most likely 10 to 20x, and for the end user, like for us, it's going to be much cheaper to use these L2 networks, and also for the sequencers, right? These Arbitrum Optimism sequencers, it's going to significantly improve their margins because it's going to lower their costs, even if their revenues might stay flat, for example. And as you can see, I guess Arbitrum and Optimism revenues are growing, despite on-chain activity kind of withering away. And after EIP 4844, proto-day trading, it's going to massively increase their margins. So, of course, the token, like the Arbitrum and the Optimism token, doesn't really get to capture these profits. But from a narrative perspective, I think it could be positive, right? It's like Lido went up a lot in Q1, but like there's like no like revenue share, right? I don't really think revenue share matters that much. I think it's more about like the narrative. As we all know in crypto. Of course, in the future, I think in like the macro / longer term scale, like fundamentals and token value growth matters. But when it comes to couple months, multi-month narratives, I don't really think it matters too much. Of course, it could be a narrative, right? But it's mostly going to be in Q4. And also, I do like the Arbitrum DeFi ecosystem, especially with the whole meme coin craze, right? You can argue that meme coins have topped, and maybe it did top. Like, I'm not going to make a bet on like whether they have topped or not, because I have no idea how to value these. I have no idea. I have no edge in like these meme coins. But even if they did top, maybe it's going to lower gas fees because a couple weeks ago it was like 100 to 200 Gwei. But even like if the meme coin craze is over, there's still going to be people trying to buy the dip, hoping that it's going to be like the bottom. People like hoping for like a dead cat bounce, and also even if people are trying to harvest their losses, they're going to have to approve and sell, which is going to also eat up a bunch of block space. So generally, I do think that more and more demand is going to go to these layer 2s, and if Arbitrum is going to do like token incentives in the future, which I think is plausible, if these DAOs are going to emit tokens that they received from the airdrop, I think that could be positive for just general DeFi activity in the Arbitrum ecosystem. So that's mostly where I have my eyes on. Also because I can afford Ethereum mainnet, but also, right, if I'm like doing like transactions every single day, I'm gonna be poor. So it's just like naturally, I think the economic incentives are there for more activity to just flow into these layer 2s. And you might think that, hey, if like the whole Arbitrum EIP 4844 narrative is too early because it's gonna happen in Q4. I think so, right? Definitely. But if you think about the whole like the liquid staking derivative narrative, the Shapella upgrade was going to be in mid-April, but the market started rallying in January 1st, so that was 3.5 months before. And if you think about the state of markets in November and December, it was primarily when it was post FTX, people were depressed. I was like, there's nothing going on in the markets, like what the hell am I supposed to do? And generally the people didn't really know like what to look forward to. But I think in that type of environment, people tend to price things in like way further out in advance because people are looking for the narratives. It's like, oh, like Triple is happening April. Okay, like let's start buying these LSD tokens in January. So, maybe it's going to be like 3 months before Arb and Optimism start outperforming the markets. But it's really hard to predict when these things can start moving. So I just think it makes sense to just be aware of it, and like, who cares if you're like 1 month early? That's kind of my perspective, right? Because I don't trade on leverage. I just kind of position for things and then just like wait for the market to reprice things. Of course, I'm wrong all the time, but from a fundamental perspective, I think it makes sense. And in terms of like the Arbitrum valuation, people think it's too expensive right now, right? It's like $1 billion. It's a little over $1 billion market cap. FDV is over 10 billion. But I do think that into the end of the year, at least until leading up to the Cancun upgrade, I think it can be one of the top performers in the top 50. And when it comes to like altcoin opportunities, which I'll talk about later, I'm going to focus on the Arbitrum ecosystem. This screenshot might be a little outdated by a few days, but I think the general ranking is roughly the same. Arbitrum is in the top 40. The market cap is roughly 1.5 billion. But if you compare to, I guess, the other comps, it's like I think it should be in the top 30, maybe even in the top 20. And maybe you can argue that, hey, like in terms of like the FDV, it's a little too expensive. But also, right, it's like, how do you value like an L2 that's actually growing in this environment where on-chain activity is lacking, that actually has a great business model? I really wouldn't be surprised if Arbitrum is trading, and also like the TVL, right, is at all-time highs. I really wouldn't be surprised if Arbitrum is trading at above $2 later this year, even like above $3. Like, Arbitrum and an FDV of 30 billion, 40 billion. Of course, that seems kind of crazy in like May of 2023, but I think it's definitely plausible. And I really wouldn't be surprised if that happens. And I'll talk about this thread, talking about like the whole business models of these L2s. So Paulinaya, I think he or she or they is a really good follow. And they were, I guess, making a comment on, I guess, like the business models of these L2s. And I mentioned this a little bit earlier, but of course, right, Arbitrum layer 2, it's not as cheap as like Solana, Avalanche, because right now, if you try to use Arbitrum, it might cost like $1 to do a transaction, which isn't great. But with proto-dank sharding, it's going to lower to maybe like 5 or 10 cents or even 20 cents. But I guess like talking more about this business model, I guess the benefit of these Arbitrum and like Optimism tokens is that it inherently, it inherits security from Ethereum, like the mainnet, like L1. So like Arbitrum doesn't really have to emit Arbitrum tokens for its validators to secure the network. Of course, like Solana, right, or Avalanche, not to like bash on these, I guess, competitors and whatnot, but in order for them to secure the network, they have to really emit a bunch of tokens to, I guess, to basically compensate the validators, right? Because to run like a Solana node, it's really expensive. So for them to be compensated, right, Solana, the network has to inflate their token supply by 8% every single year on average. But Arbitrum doesn't have to do that because the network security is inherited from Ethereum. And I guess there's like also this, with EIP 44.4, the costs are going to go down. The Ethereum usage, not the Ethereum usage. The costs for the sequencer and also for the users are going to go down. So I just think more and more activity is going to happen on these L2s. And Paulinaya also brings up this potential idea of if, like Arbitrum, the DAO decides that, hey, why don't we inflate the Arbitrum token by 1 to 2% per year and sell that to Ethereum and essentially compensate the users for the gas fees that they use to essentially make Arbitrum layer 2 fees be zero. And even post the IP 44, it might even be like a 0.2% inflation rate. But basically, right, the L2 economics are just so good just because, the sequencer is printing in fees and they don't have to emit the token for network security. And I do think that over time, the market is going to, warm up to this concept. And I do think that Arbitrum should be something that people should look into as a potential longer-term investment. Of course, I sold my Arbitrum tokens. I mean, I don't think I ever mentioned this publicly, but I sold it like 160, and I primarily reallocated all those profits, like airdrop profits, to on-chain perps, which I'll talk about because today I actually made this whole GMXv2 thesis before the testnet was released today. But I think the thesis still remains, and I've been I've been in GMX and GLP for over 2 years, and I'm pretty familiar with this market and how it moves. And I actually bought a bunch more, which we'll talk about later. So GMXv2 should be coming out recently. I'll talk about the timeline more, but I think it's going to be the next significant DeFi innovation in the space, and I do think it makes sense to just keep tabs on it, because I think when prices go down for DeFi tokens, I think a lot of people in the market just tends to think about price and the fundamentals in the same way, or price and developments in the same way, as in if the token price goes down, the devs aren't doing anything. But that's not the case, right? Obviously, of course, if the price goes down, then maybe people aren't really using the platform or the network, and it might feel bad. But the developers that's actually trying to build for longer term, they're still around, they're still building, and I think that's where we should have our eyeballs. They're going to implement Chainlink's low latency oracles, so maybe the trading experience improves significantly. Of course, it's really hard for me to evaluate V2 before it's on mainnet with real money, but just thinking talking about it conceptually, and I think the biggest improvement / change from the GMX that we know of, right, V1, is that it's going to have these isolated pools, and GLP, like GLP V1, right, is going to be slowly sunset over time. And I think I can actually, so let's actually go over this testnet. This just came out, and of course it's really hard to evaluate because it's like with fake money, but basically with V1 we had GLP, which is like this one like basket of currencies that we can buy and be the counterparty for all traders. But with V2, it's going to have these isolated pools where, for example, it's going to allow for more synthetic trading pairs. For example, if you want to provide liquidity for the Doge market, you can do so by depositing like a 50-50 pool for each DAI. So I think conceptually it's like, think about it like Uniswap V3, right? Just ETH USDC, like Bitcoin USDC pools, and people are going to be trading in and out of those pools. And it's also going to allow for more flexibility because, for example, like you can provide liquidity for the Solana market with ETH USDC pools. This is testnet, so like it's gonna it's gonna change. It's really hard for me to evaluate, but it seems like for ETH USDC market, you can deposit like single-sided vaults for USDC and also provide liquidity for ETH USD. And if it's paying like 45% APR, right, that's gonna be a really good farming opportunity. And I mean, this isn't confirmed, but I'm gonna speculate that, I think the the GMX team got like 8 million tokens for the Arbitrum token. Maybe they're gonna use some of that to incentivize LPing. I think that kind of makes sense. So, this just came out. It's really hard for me to evaluate, but I do think that it's gonna be a significant improvement over the current model because the current GLP model, it works, it's good, but it doesn't really scale that well. And until V2 is out, I think it's gonna put a cap on the GMX price. And if GMXv2 is up and running and thriving, I think it's gonna allow GMX to enter price discovery. And I'll talk more about the price later. So let's talk about the timeline of V2 because yes, the testnet's out, but when does it actually come out, right? Because that's more important. So I've been talking to Noodles. This person is building Rage Trade. Rage Trade is one of those platforms that I'm pretty excited about. Conceptually, it's kind of interesting. I don't want to hype it up too much because they have a bunch of crypto Twitter influencers in the seed investment deals. But from a tech perspective, I guess from a user perspective, right? It's like GLP is really simple. So maybe these isolated pools are going to be less attractive for less sophisticated LPs because you have to think about it more. But I'm sure that it's going to be more simple. We'll have to wait and see. But Rage Trade is going to be building GLP V2. So I guess if people want to, buy one asset that gives them exposure to all the different markets, maybe they can, build a GLP style basket on top of GMX synthetics, and it's going to be powered by, GMX native incentives and also the Rage token, which is going to come soon. So I think, these types of innovations should be thought of. And I think the power of DeFi is composability, where, GMX creates GLP, and then all these other DeFi applications try to build other products on top of GLP, such as delta neutral vaults or levered GLP vaults. Typically, I don't really recommend these types of vaults because I don't really see why I need to lever up my GLP exposure or do delta neutral vaults. I don't think there's product market fit there. But hey, composability is going to create moats for GMX because at this point for on-chain perps, I think the liquidity is the moat because all these other GMX clones can fork GMX, but GLP will always have the most liquid market. And in terms of in terms of timing, it's going to come after V2, and then Noodles have been tracking V2 developments for quite some time now, and I'm when is V2 coming? And he believes that V2 is going to come roughly around June. And if this is true, then I think that GMX, the asset, is at fairly attractive levels. Because recently it went from $90 to $60 with declining volumes and less excitement for the product. But if V2 is coming out and that's on the horizon for maybe June or July, I really don't know. I thought this thing was gonna come out in November of last year, so there could always be delays. But for this reason, I just thought that hey, let's. I actually quadrupled my GMX position at $60 or roughly below $60 for a multi-month swing. It's a really liquid token, so even if I'm wrong, I can get out really fast. And it's one of those tokens where I really don't mind holding for multiple months. And I think on-chain perps have tailwinds fundamentally, and they're just great businesses. So let's talk about that. So yeah, so like prices have gone down because the yields have come down, but I don't think it's that big of a deal. And I think the narrative for V2 is going to be more important than whether GMX is paying like 3 or 4 or 5 or 6%. If I were to be honest, in terms of tailwinds, like Bybit is like one of the like top platforms, right? It's like if you follow like trading, crypto trader, influencer people, right? They all like use Bybit, right? And they have like the ref links and whatnot. So if they're going to enforce QIC, then maybe there's going to be more demand for on-chain perps, and also Binance, right? With the whole regulatory clampdown that the Western market is doing, maybe like these Canadian citizens, like what are they going to do, right? Maybe they're going to have more demand for like on-chain perps. I mean, I have no idea, but I feel like there's tailwinds for the perps sector, and like fundamentally, I mean, like it's growing, right? It's still growing, and I think whenever the markets are generally going sideways, and when there's like market uncertainty, I think people are going to have a higher bar in terms of like the type of assets that they want to hold in their crypto portfolio. Because when Pepe is going crazy, right? When meme coins are going crazy, it's like, yeah, like I don't care if Pepe is not paying a yield because it's going up. But when Pepe is going down, it's like, okay, like there's like no point holding this. And similarly for other tokens, it's like if the market's going sideways, it's like, why do I want to hold this token? Like, why do I want to hold this type of asset? And if it pays some type of yield that is generally sustainable, I think people are naturally going to have I guess like more of an inclination to allocate assets into these types of vaults. And if they already have assets, right, capital in these vaults, there's less of an incentive to leave or sell these types of assets. I'll talk about a few. I know people like Level Finance. It's on Binance Smart Chain. I'm not a huge fan. I mean, I think the LP, like the tranches are interesting, but I'm not like a huge fan of the token just because there's like inflation every single day. They're inflating the token to the traders, right, for incentives. So I'm not sure like how like organic the volumes are. They're also inflating the token for the LPs, not for like the senior, the mezzanine, and the junior tranche, but also for the level B and B pool 2. If you don't understand it, I mean, that's totally fine. But basically, they're inflating the token. The fundamentals look pretty decent. I guess Arthur Hayes is rumored to be an investor, so I guess he can chill it like any given day. But I mean, it's like like I think LPing is fine, but level token maybe not so interesting. But I mean, the point is, right? TVL is growing despite markets being uncertain because it pays a yield, right? That's kind of the point. Also for GLP and GMX, sure, the yield has come down, but it's hitting all-time highs, higher highs and higher lows. I mean, this trend is probably not going to stop. Of course, with V2, maybe we're near a top, right? Because GLP is going to become less of a focus. But I think in aggregate, GMX TVL should be up and to the right over time. And in terms of open interest for GMX, I mean, it's pretty good, right? I mean, yeah, I mean, it's growing, right? It's growing. It's kind of like the Arbitrum and optimism fundamentals, right? It's like if it's growing in this type of market, then I think it can command a premium. I don't want to talk about PE ratios in like in crypto terms, but if you think about like assigning like I guess like price to earning like multiples for these types of assets, like these types of assets should command a higher premium than like other assets that's paying less of a yield because they're actually growing. GDI, right, for Gains network, it's also growing. I'm less of a fan of like the Gains DAI vault because there's like this unlock period of like this different epochs where you have to wait like a week to unstake, and it's gonna allow less composability. I was talking to some devs and they're like, yeah, like it's really hard to build products on top of a GDI just because of like these whole epochs and unlocking periods. I'm generally more a fan of like this GOP type of assets. I mean, Gains is interesting because I mean the token's like down like $5 from like an all-time high of like $13-14, but I mean the volumes are still growing, so I always think that's interesting. Mux, right? I talked about this last week, but Mux TVL going up and up and up, and the protocol income is, I mean, I guess it's kind of stagnated, but I don't think it's like a bad thing, right? I mean, these Perps protocols are growing in this type of market, and I do think that it's going to give more and more reasons for people to allocate assets to either like the protocol's native token or just like Mux LP, Gains DAI vault, or just GLP, and I think that's like just happening, and I mean that's been happening like for the past year and a half, right? Because GMX was like the one asset that outperformed the entire markets in 2022, right? It was actually going up. So if the markets do go sideways or down, like why can't the same thing happen? And I was kind of thinking about this. I feel like on-chain perps kind of feels like a risk-off play because TVL grows with more market uncertainty. I mean, it even grows with like, like when the markets are going up. But like these types of platforms have really, really sticky liquidity. And I think I kind of consider it to be like a defensive sector, because in the stock market, there's like different sectors, right? There's like consumer staples, there's consumer discretionary, like high growth. And of course, in like a bull market, right? It's like, we don't want to buy, like we don't really want to own consumer staples. We want to own like high growth stuff, right? Because they go up more. But when the stock market goes down, there's more demand for things like Coca-Cola, because consumer staples, because their earnings are going to be relatively stable. And I think, I think it's reasonable for DeFi to have like different sectors. And I think on-chain perps is kind of like the consumer staples of the stock market. Maybe I consider like DeFi staples, farmer staples. I have no idea how to think about it. But I do think that, hey, if the market's going to go sideways, I do think on-chain perps are going to outperform most other tokens in this market. You can say the same for LSDs, because the liquid staking derivative narrative is really simple, right? It's like you hold Ether. Why, right? Just stake it, earn 5% at least. I mean, yeah, like, so I mean, all these LSD tokens are naturally gonna have like up-only token, up-only TVL metrics. But if you think about like yield, right, farming and whatnot, I just think that like these on-chain perps are more interesting. So when it comes to GMXv2, it's been in works for over a year. It's been rigorously audited. And if you do believe in the team, then I think it's going to be considered like the next new innovation in DeFi, similar to how Uniswap v2 launched. It got a bunch of TVL. Everyone forked UniV2, like SushiSwap. We had like a bunch of forks for UniV2, and then Uniswap v2 said, "Hey, screw you. We're gonna launch V3. It's gonna be better than V2." And V3 is king, right? Uniswap is king. I guess like let's talk about this more before I talk about the forks. But basically, right? If you think about the price of GMX. Maybe this isn't that, oh, what the hell, this isn't that interesting, but basically I feel like in 2022 we had this infinite sell wall at like $55 to $60, and then in the beginning of the year we kind of went above it, and I feel like until V2 comes out, I think there's going to be like some infinite sell wall below $100, and in order for GMX to go into price discovery, I think V2 has to come out, and then it has to come out and the fundamentals and the metrics has to look good. So you kind of have to bet on the team, right? But I feel comfortable doing so. And I guess like from a more TA perspective, right? It's like, we had this infinite sell wall at $60. We finally broke above it, and maybe, right, with V2 on the horizon, we're going to see a bunch of buyers step in at $60. I was one of those buyers, right, that kind of held the line. Of course, we could go lower, but given that V2 is out, given that the timeline for V2 the testnet for V2 is out, and the timeline for V2 seems to be in 1 to 2 months, I think, that is going to give the market hope and reasons to buy the dip. So if GMX goes to like $55 or $50, I think we're going to see dip buyers. One thing we all learned, like when FTX collapsed, it's kind of zoom in here. This was kind of crazier because like GMX nuked, and then like when FTX collapsed, it went down 27%, and then the next day it went up 35%, right? So we had a bunch of buyers at like the $30 range, and even like the $40 range, right? It has a bunch of buyers. So if V2 is on the horizon, then I think we're going to see buyers. I mean, I don't even know if we'll even get here, but I think we're going to see a bunch of buyers in this range. So from a trading / investment perspective, I do think that $60 seems like a pretty good level to buy at, because I don't really know what the downside is, but like from the upside, right, it can definitely go above here, and assuming that V2 is a good launch, I think we can enter price discovery. So initially I piled in GMX at roughly $60 as at least a trade idea, because like downside like $50 maybe, right? That's like what, 10-15%. Upside, it can go up like 50%, so I think that's pretty good, and it's a pretty liquid market. There's also this discussion around the various forks, because technically if GMXv2 comes out and it's like a far superior product, then maybe like the GMXv1 clones forks, it might not really command a premium. There might be less risk appetite, right? But knowing the crypto markets, if GMX is going up, then chances are, right, like these other tokens are probably going to start outperforming. So I think, for me, I think it kind of makes sense to have most of my perps bet on GMX, but also have like other bets elsewhere. Like for me, it's MCB, right? I talk about it next week. like for example, gains, right? I mean, gains growing in TVL, growing in open interest, but the token has been really down only. I don't know. I kind of feel like these perps coins are in this bottoming process, right? Like even like from whole T perspective, right? It's like maybe $4 to $5, like a good demand zone or whatever. I mean, I'm making a bet on MCB because it's like a lower market cap. Its fundamentals are also looking pretty decent. And like I like the fact that it's like the most liquid place to trade Arbitrum rate the token because I'm bullish on Arb for like the next couple of months. So that's kind of how I view it. Yeah, so I think it's totally reasonable to bet on the king. I think you can kind of make a case for all these different types of tokens. But for me, like big bet on GMX, and then a small MCB bag for potential beta. And if you think about like other people's thoughts, right? It's like, hey, at the end of the day, right? Even with like the whole liquid staking derivative narrative, Lido was basically, Lido, even though it was like higher market cap, it outperformed most other assets, like in the whole LSE sector. So like maybe there's a case to be made for just piling in a GMX, right? Because you also have to think about like sleep adjusted returns. It makes sense to buy these other clones. Maybe it goes up more, but like maybe, right, from like a lifestyle perspective, for me, right, it's like maybe I just like pile into GMX, stake it, wait for a few months, maybe sell higher, and then in the meantime just keep researching other stuff, keep researching other Perps protocols, offshore protocols, LSD protocols. Maybe that's like the best way to think about it, right? The sleep adjusted returns, and in this type of market, if I can buy GMX at $60 and have it be a super liquid market, and I think the risk reward is good, then I think it makes sense. The fundamentals are growing. I think the businesses have tailwinds, and I think V2 is going to give reasons for people to buy the dip. And I'm sure that like a couple weeks from now, everyone like on Twitter is going to be like, oh, like here's the upcoming thread on GMXv2. Here's all you need to know, right? And I think generally, I think it's going to be like a good asset to hold for the next couple of months. So lastly, I want to talk about Hyperliquid, the testnet. This is an airdrop farming opportunity. Generally, I don't like to talk about airdrop farming opportunities because I don't think it's like a best use of your time or capital. Whenever we have like the Arbitrum airdrop, everyone like goes crazy about farming airdrops. But then give it like a few months and then no one's gonna talk about airdrops because like nothing's happening. But I'll talk about this because I do think it's interesting. I don't think anyone's talking about it. So yeah, let's talk about this. So Hyperliquid is this order book perpetual DEX built on its own L1. It's built on the Cosmos stack, so it's its own app chain, and their mainnet closed alpha is live, and the product is actually good. So I think it's like worth using because you can actually use it with like real capital. It's on Cosmos, yeah. So it's an app chain, and you can deposit USDC and withdraw USDC to and from Arbitrum. So that's kind of how it works. And you use the platform, and they list assets pretty frequently. I think they list assets every single day. The fees are more expensive than like GMX and other Perps protocols because I think it's less liquid. They have their own market maker, but they did confirm. Yeah, they did confirm a token. This is the founder. I'm not even sure if they're going to airdrop, but I'm assuming. They might not airdrop, but they're going to have a token, so maybe it's worth farming it. I usually don't share. I don't think I've ever shared a referral code for like a leveraged protocol exchange because I feel like I have like ethical dilemmas around it, right? It's because like I don't want to promote leverage trading. However, from an airdrop farming perspective, I think it's fine to share this referral code. The thing is, I only get 3 referral codes a week, and the referrals reset every Thursday at 0 UTC, which is like afternoon time or nighttime if you're in the US. So one code is not going to be enough. So basically I collected a bunch of other codes from other community members. So maybe depending on how early you watch this video, maybe you can get a referral code, and then if you don't get it, then wait until Thursday 0 a.m. UTC, and then you can do this. And if you don't get it, then maybe go on Twitter and look for other referral codes. But basically, I think it's good if you're gonna leverage trade. I don't promote that, but hey, maybe it could be a good platform. And even if you don't care for it, right? Maybe do a few trades, collect some volume, and then maybe you can, be eligible for some token. So yeah, I think that's it, right? That's it for the video. Let's see how long this video is. 34 minutes. Okay, that's pretty good for a Taiki video because my videos tend to run 40 minutes at least. But thank you guys for watching. That's about it. So I guess TLDR, I like Arbitrum, I like Optimism, but I'm more focused on the Arbitrum ecosystem because, better metrics, and also, Arbitrum incentives probably going to come at some point. And for DeFi native projects, the sector that I'm most interested in is in the Perps sector, and I like the things that are building on top of Arbitrum, right? So I like on-chain Perps on Arbitrum. I think that's the most interesting, and the platforms I like most is GMX, Gains, and MCB Mux protocol. And there's nothing wrong with like not buying these protocol tokens, like just LPing for these types of assets, that's totally fine as well. But in this type of market, I do think that more and more capital is going to flock towards on-chain Perps, because like that's where that's like one of the best places to park capital. And if that's going to be the case, I think it's reasonable to expect the fundamentals of these platforms to grow, because the more liquid these platforms become, the more and more customers it's able to, provide for. So thank you guys for watching. And if you like the content, like and subscribe. Link to the premium Discord is in the description below. Thank you guys for watching, and see you next week.